Okay, so amid the bad news and dumping, there is one number that we have to keep in mind. If we fall below this one number, or if we close like a weekly candle below this one number, then I think the bull run is truly over. And at that time, I will say it is a reversal instead of just a temporary retreat, like the Binance CEO said it was today. And that number is $73,000. Now, that might sound familiar because that is the number that we actually achieved, the maximum price we achieved before the Donald Trump election. And even on the eve of the election, we were at 65,000 and going up before he won. So 73,000 is that number. If we actually go below that, then we have lost the upward momentum and we've actually entered into bear market territory. I think that is also a psychological number because it was kind of like the mini peak that we actually had before the true peak we had at $108,000, or the true peak as of right now. We could actually go much higher, which is what we're hoping to go to. But if we retreat past the last mini peak, I definitely think the momentum is entirely gone. And I do think to get to that mini peak, I think like there would be like no trade deals before March 4th, and those tariffs will actually have an effect, and they might go on for several months. Now, if we get several more months of like periodic dumping, I think people are really going to lose confidence. Inflation is going to go up, and the Fed rates aren't going to come down at least until next year. So we have a lot more suffering to go. And the 4-year cycle completely just gets blown apart. And the top of the cycle was 108,000. But there is another reason why 73,000 is very important. And that has to do with the 50 EMA and the 200 EMA. Generally, with the EMAs, when the 50 crosses the 200, upward on the upward trajectory, like here back in October, end of October, that indicates a golden cross. And when the 50 EMA crosses the 200 on the downside, that indicates a death cross, which means it's a bear market. Now, these indicators obviously are not very certain, but they do work from time to time, and this is one of the major indicators that people actually look at. Right now, the 50 SMA is 98,000, the 200 SMA is $81,000. Now, the thing is, since we are actually below $98,000, the 200 SMA is actually consistently going up, and the 50 SMA is consistently going down. Now, if we drop to, if we stay in the range of 80 something thousand, I think we'll probably turn up before the 50 SMA crosses below the 200 SMA. But if we drop down into like the 70s range, I think the 50 SMA will go down fast. The 200 SMA is going to go down as well, but I definitely think the 50 SMA is going to go down even faster than the 200 SMA. Because for the 200 SMA to really go down, you'd have to like the prices right now would actually have to be less than 200 days ago. And 200 days ago, like, Bitcoin was like, in that range of like somewhere between 50 and 70,000. So even if we go to like, around 70K right now, the 200 SMA wouldn't really drop, and the 50 SMA would drop very, very quickly. So if we get to 73,000 or so, I think like within a few weeks, the 50 SMA would cross below the 200 SMA, and that would signal the true beginning of another bear market. So a lot of factors. One is we would lose the momentum if we drop below 73. Two is really like that would basically be a signal that like tariffs have kicked in and we're not getting a resolution of the trade war anytime soon. Inflation is going to go up and the Fed's not going to lower rates. So that would definitely kick in not just a bear market, but maybe a recession in the overall economy. And three, if that happens, the 50 SMA will cross below the 200 SMA, which would indicate a death cross. So let me know what you think about that. Like and subscribe, and hopefully this does not happen. I will see you guys later.